The best credit cards for balance transfers, which will undoubtedly help pay off debts. Because England is getting more and more bogged down in the decline in the cost of living and is preparing for even higher inflation, those who have credit card debts have every chance to experience the effort. In April, household credit card borrowing increased to the highest value in more than 16 years, which actually talks about the fact that more and more Englishmen are turning to debt in order to overcome current life circumstances. One of the likely pause methods for those who are trying to overcome problems is credit cards for balance transfer. Balance transfer cards have long provided a method to reduce expensive interest payments by transferring the obligation to a fresh card, often with a commitment of 0% in the direction of a fixed period of time. At this point, on average, balance transfer transactions offer the longest 0% stage in more than 4 years because lenders compete with each other. In the meantime, borrowers do not lag behind payments and keep the criterion. They have every chance to use these cards to repay debts without percent instead of normal credit card rates from 25 to 30%. According to the estimates of the charity organization Money, the average rate of any household on a credit card makes out in the range of £2,173, while Moneyfacts reports, in fact, that the average rate on a credit card in real time makes out 26.7%. This means, in fact, that a person with a balance on a credit card in the amount of £2,173 is charged 26.7% of the annual, and a monthly fixed repayment in the amount of £65 will result in an accrual of percent in the amount of £1,439. However, the introduction of a card with a 0% balance transfer, which charges a commission of 2.5% on a debt of £2,173, will turn out to be only £54.33. Those who wish to repay the obligation in the direction of 12 months still have the opportunity to save it, taking into account, in fact, that in this case it is possible to make a transfer, including without the need to pay a commission for the balance transfer. For example, someone trying to pay off a credit card debt in the amount of £4,000 in the direction of 12 months, with this usual annual earnings of 26.7%, has the opportunity to save £537 in the guise of percent by switching to a balance transfer position. What is not the least, it is essential to repeat, in fact, that the transition from one balance transfer card to another is not required to be used as a long-term debt strategy or justification for such, in order to allow debt to accumulate. Those who still transfer funds to one of these cards will be obliged to make sure, in fact, that they repay them in a timely manner, otherwise they potentially risk meeting with higher interest rates. It is also worth thinking about how probably, in fact, that they will be accepted on the card before that than to submit an application, because refusal or submission of a very large number of orders have every chance to affect their credit rating. See will you be accepted for a credit card for balance transfer below. Rachel Sprinkle, a self-finance specialist at Moneyfacts, said an uncountable large number of borrowers absolutely have every chance to rely on credit cards in order to make ends meet because the price of life continues to rise. Those who have debts are never obliged to hope, in fact, that they always have every chance to simply run from one long-term interest-free transaction to another, and its main borrowers want to painstakingly manage debts. Before that they will be very difficult and seek advice if it is not easy for them to overcome with payments.